Okay, well, there's some portion of registrants on here today. So I'm going to get started. We are recording this, so it will at least be accessible on our YouTube page. We're going to try to get it up onto the website with the other COVID-19 resources as soon as we can. You'll also see the presentation from yesterday with the Small Business Services Department of New York City. They gave a Q&A yesterday about different loan programs and how they're helping. Today, we are really trying to focus on how the entrepreneurs, small business owners, independent contractors, self-employed individuals that we serve can present the documentation that they need to back up their applications for relief funds, and to make sure that they get to keep those relief funds. If there's grants that they get forgiven, or if those are loans that they intend to have forgiven, that they get to stay as grants. And bookkeeping is really the central framework for this. For Start Small, Think Big clients, you know that you can schedule appointments with me, Ian McDermott, the financial program manager, as often as is useful. One-on-one, we can set up your books and walk through categorizing and reconciling and making sure that the statements make sense and are useful for you. The particular pieces of information that you may be getting asked for right now or are concerned about being able to provide, should someone ask, are very detailed. There's a lot of different things that you might be getting asked for, and they are going to change from business to business, and from situation to situation. So I'm going to try to give as broad of an overview as I can about what documentation may be useful. I am not likely to be able to answer very detailed questions about the applications and about certain criteria, especially for really unique or nuanced situations. The last couple of weeks, I think all technical assistance providers in our position or other business service agencies have probably been giving some of the most wrong information that they've ever had to give in a couple-week period, and that's not really anyone's fault. There's been changing guidance almost daily, in addition to the actual changes of the laws and policies, and the different facilitators or processors of these programs. So we are all doing our best to make sure that we have the most up-to-date information that gets shared out, but there are going to be gaps of information missing, as well as corrections. So I've tried to make sure that everything I'm going to share with you today is backed up by guidance directly from the SBA or through examples from individual lenders who might be processing some of these funds, or that are processing the applications, and then some of the other guidance agencies and organizations that are out there suggesting how applicants and the processors should be considering these things. So we're going to jump, well, I should also talk about the invitation that you received, the description of this workshop webinar referred to an earlier bookkeeping webinar that we did a couple of weeks ago. And that was really just about using bookkeeping in general. It's mostly intended as an introduction to using online bookkeeping softwares. If you're still totally unsure of what bookkeeping is or how you're supposed to do it, you should really watch that. No problem having you on here, but I'm not going to address the questions of early setup and connecting bank accounts and things like that. If you have particular questions that you really don't think I would have addressed in an introduction webinar, go right ahead and get into that. But we're going to try to focus on how you can use these systems to build your application, and to make sure that you can keep these funds. So moving into today's workshop, the general things we're going to talk about first are the different programs. You will see a little bit about the EIDL, which is the SBA Economic Injury Disaster Loans, and the Paycheck Protection Program. Again, there's a lot of detail in there. I'm going to try to touch on what general documentation might be needed and or useful. Situations change quite a bit from person to person. And then we'll get into sales records, what you might be able to show to indicate that you have experienced economic injury due to the pandemic, and what different, how to see those through bookkeeping systems if you don't already have them, and what your kind of alternatives are. For the expense side of things, what you're going to be using these funds for. A big part of this is payroll. I would say the primary intention of the CARES Act and these relief funds is to get money into the hands of workers, and that includes the self-employed. So we'll talk about some of those general considerations. There is a ton of conflicting advice about what makes up payroll in these applications or eligibility criteria, gross payroll, including benefits and things. We'll talk a little bit about that, but the certainty that you're going to be looking for, you're always going to want to go directly to the source. And that might be after you complete an application and get contacted by the SBA, or you submit to a lender. Always try to get information directly from the source when possible. We're communicating that as best as we can when we hear this information, but if you can, go right to the source. And then we'll talk about financial statements. So income statement is going to be the primary one that is asked for in these applications, and will be reviewed after receiving it and potentially getting either audited or just try and qualify for that forgiveness. And balance sheets as well. So balance sheets for a business are not something I've actually seen a lot of requirements around for these relief funds. But in general, it is something that would be required for loans, for financing, and for typical SBA economic injury disaster loans. Those would require balance sheets, and there's a component of the current guidance that still requires a personal financial statement, which is very similar to a balance sheet in terms of assets and liabilities. So we'll talk about that. And as I've mentioned earlier, we want to talk about making sure that you don't run into problems afterwards, right? There's a big urgency and push to get this money out there as quick as the government can. So the speed at which you might get approved or get in contact with the lenders may not be the same kind of dearth or lack of scrutiny that you're going to experience later on. That might be a couple of months from now, where you start to get asked some detailed questions. So I am going to try to keep up with the chat as it happens. If every question is mostly relevant, then we will be able to address those. But in some cases, I might have to skip. And if there's time, I'll try to just answer everything at the end. Question about setting up chart of accounts. So chart of accounts setup is something that a lot of bookkeepers and accountants kind of offer as this introductory service that they can sell you. that's the framing of that might sound a little cynical, but it's not super useful in and of itself. The individual transactions that you have, because your bank statement has withdrawals and deposits, and those represent sales or expenses for a certain type of activity that you take on, that's really what your chart of accounts should be built on. You shouldn't build more accounts than you actually have transactions for. And the language of that mostly just needs to suit you, right? You need to be able to understand what some expense category means, if that's administrative expenses or advertising. It needs to make sense to you. You need to know what goes in there and what doesn't go in there when you see a number next to it. We will talk a little bit about Schedule C chart of accounts. That's a slide in this presentation, but I don't think it's as useful as it might seem, or as fee-based accounting service providers might make it seem. Hopefully that answers roughly that question. The programs that we're talking about, relief funds, as I'm sure you've all seen, the PPP, the Paycheck Protection Program, and the Economic Injury Disaster Loan. Now, both of these come through the SBA, but the Paycheck Protection Program is processed and administered by lenders, right? So the reason I mentioned this in a discussion about the statements and documentation is because there's going to be different requirements from who's processing it, right? We're even seeing that there's differences between the applicants and which days they apply. For the Paycheck Protection Program, interestingly enough, tomorrow there will be a different application for sole proprietors and the self-employed. Now, there's not been any guidance or restrictions stated about the current application not being usable by those by people in those situations, self-employed, independent contractors. But now there's going to be a revised one that's probably, hopefully, easier for you to fill out. We'll talk about what some of those things might be, the differences between someone who has, let's say, full W-2 payroll, using payroll processors, and the self-employed. And then there's the Economic Injury Disaster Loan. So this is a program that's always existed. Always is, of course, relative, but the process that the SBA goes through anytime there's hurricanes or anything like that, that's what this coronavirus relief is based off of. So this is something you would access directly through the SBA website. There's a bunch of detail about this that is changing daily. Typically, it's a very detailed process. Right now, they've truncated a portion of it, and it's still unclear for each applicant how much longer or how much similar to the prior EIDL applications these new ones will be once you hear back. So the clarification around self-employed people, the self-employed just means anyone who's not being employed by someone else. So if you're not on a W-2, you're earning income, you are you fall under that self-employed umbrella. So if you're an independent contractor for someone else's business, you're self-employed, and you are able to apply for the PPP on your own. The sole proprietors who might be employing others, their net income is what determines what their payroll for themselves is. We'll talk about that in just a little bit. But when I say self-employed, that does mean sole proprietor, business owner, single member LLC owner, member of a partnership, and independent contractors, otherwise known as freelancers, anything like that. All right. Where this came from was QuickBooks is developing a bunch of services for Paycheck Protection Program in particular, of course, around payroll for those who use QuickBooks Payroll. And they're also they currently have a ton of resources if you wanted to read through explanations about these programs and guidance on how to apply. It seems like they're going to have applications actually up on their website, and soon they may be some of the processors of those applications, because it's no longer limited to what's referred to as 7A lenders, the intermediaries who typically provide SBA loans. So you can find more information there. It's under beta right now. So it's just kind of a test version, but they have like a choose your own adventure where you tell the program which criteria your business and circumstances meet, and then they'll tell you which program's a better fit for you. You've seen from Start Small that we have a bunch of resources daily, if not weekly, going over this, and we're getting volunteers to help guide individual clients through as well. So I don't want to spend too much time on these programs in general eligibility. I'm not the best person to answer each of those questions. Always, if you can, go directly to the source. In the case of PPP, that's lenders. We'll talk about one today. Spring Bank has a bunch of resources available as well, and they're accepting invitations. And the EIDL, that's directly on the SBA website. All right. In general, when looking at any of these relief funds, or really any loan process in general, there's a bunch of things that might be relevant for you to prepare if you have them. Just talk briefly about these here, and then we'll talk more specifically about them in terms of the two programs that we just touched on. So what you'll see a lot of, because these programs are intended to get out so quickly, is a request for self-certification. In particular, you see that with the PPP. So the applications that you're submitting for the PPP, regardless of what an individual lender might additionally ask for you, on that primary application document, you're asked to essentially swear to these circumstances, right? And it'll be things like that you actually faced economic injury, and that might have a specific 25% slowdown in sales, that you're going to use these funds for payroll or the other expenses that you list. These are fairly serious self-certifications, right? They are actually prosecutable as perjury if they can prove that you knowingly lied about it. So they use the terms perjury on the PPP certification and or the PPP application, and then on the EIDL application they use the term fraud. I can't tell you what exactly proceedings would look like in either of those cases, but mistakes are a very different thing from outright lies, right? So it's okay if it turns out that what you thought was, let's say, the number for your payroll turns out to be a little bit different because you just didn't understand the calculation of gross payroll, or you didn't see a qualifier about group benefits or something like that. That's not going to lead to you being jailed for perjury or fraud. But this is a serious process, right? These funds, these are mostly taxpayer supported, whether that's money now or money the future generations are going to have to pay. the government and the political environment is pretty serious about these funds being used in what they consider the right way. So they try to be as clear as they can around the general intentions. If your business has been hurt by this disaster and you're trying to restart your business, get it back to normal as if the pandemic never existed, then you're going to be fine within these general guidelines. And you're not asking for more money, and right, but that would require you to have not been just trying to get back to normal. So you will you'll see these self-certifications, take them seriously, but don't stress out about them, because urgency is to some degree material in all this. For PPP, they are saying that there are a limited amount of funds, which was clearly stated in the CARES Act. Of course, they're going to, some at least will try to have their get second rounds of funding, but right now it's essentially first come, first serve. So getting these things out as quickly as you can is a good thing. On the first day, I believe they spent $4 billion in approving these loans, or $4 billion worth were approved, and that's supposed to be out of a pool of roughly 350 billion. So I don't think the need is that you fill it out as soon as you possibly can, as soon as you get off this webinar, but try to get this information as accurate as reasonably possible in as quick a reasonable amount of time. Personal financial statement is a specific document. I believe it's the SBA 940. You'll find a bunch of these document numbers when you go through the different applications. The next page, I'll link you to a walkthrough of what a typical disaster loan application requires. Right now, that's not being required up front. So we'll go through what's being required up front, which is a pretty quick, straightforward document. But there's this whole follow-up process that's not set in stone. It depends on each individual applicant and the person essentially processing it too. But the general idea is that you put in your total income as an individual, as well as the business owner, any assets and liabilities that you have, things you own, investment income, investment accounts, and anything that you might have currently outstanding in terms of personal or business debt. The EIDL is generally considered a credit worthiness based loan. So if they don't believe that you can pay back the loan, they will not approve you for the entire loan amount. Now we'll talk in next slide about the grant advance that I'm sure many of you have heard about. That does not depend on creditworthiness. So you would need the personal finances of all the owners, or if you're a married or joint filer in taxes, you would need their personal financial information to fill that out as well. But again, not required at the first part of the process. This is follow-up. Statement of liabilities is essentially part of the financial statement. I would say that people who have more investments, assets, things like that have a clearer distinction between the personal financial statement and statement of liabilities, but it is a separate document. And then for business owners that have payroll, employees, workers, you may have W-2s. W-3 is just what you submit to the Social Security Administration. It's the same information. Difference is just the recipient, W-2 being the worker, W-3 being the government. And then 1099s for independent contractors. Now, if you are a pass-through business owner, whether you are paying yourself owner's drawings, salaries, dividends, however you want to call it, if you have a profit as a pass-through business, even if you leave it in the business bank account, you have self-employment income. That's that net profit or net income is, what your self-employment income is, and that is now being considered part of payroll. So whenever you see the phrase payroll, you are seeing something that includes net profit for a sole proprietor or the self-employed. There are tax information authorization forms. In some framings, you'll see it as request for transcript of taxes. This allows the SBA to directly take information from the IRS or your local state tax authorities and see what your income and deductions and filing status has been, as far as I understand, over any period of time. So they will ask for that as well. Again, part of this general creditworthiness that is a component of the economic injury disaster loans, not necessarily the grant. And for the PPP, you will see things about loan preparation, right? Because the PPP is administered through a lender, which might be credit union, might be a big bank. It seems like there's going to be a bunch of non-traditional lenders also processing these PPPs. People like the payment processors who issue cash advances, whether that's Square Capital or QuickBooks Capital, you might see them processing these loans as well. Some of them will ask for CPA certified financial statements. In those cases, what's very important for you to know is that you cannot get charged by a CPA for preparing the loan application for the PPP. Okay, the lender themselves are getting fees from the government to do this processing. The CPA can get paid out of that. They are not allowed to collect fees from the applicant. So you should be aware that that's not okay. That might be part of a scam, might just be someone misinformed, but you are not paying anyone to prepare these loan applications. The last thing I'll say about this is general idea of supporting documentation. I would say the scale of ideal, what's most ideal would be having a CPA certify your statements, right? They've looked through, they've seen how how each of your sales numbers and expense numbers are backed up by whether it's a bookkeeping system and a reconciled bookkeeping system and bank statements, or however else they come to that. CPA can certify that everything looks correct. That's most ideal and would help speed up the process of these loans more than anything else. But of course, getting a CPA to do this work is going to take some time. So if you, and it's not something that I would advise at this point, right? Because it does have this general first come, first serve. If you can do the work on your own and get to the point of self-certifying your, and I say that loosely, the self-certifying your statements, you believe that they're right? You believe that the numbers are correct. You've done everything that you could in a bookkeeping system, which we'll talk about. Then you would have reconciled financial statements, right? So that would be the next best thing. In absence of a complete bookkeeping system that shows all of your expenses, differences between your cost of goods sold, whether that's direct labor versus operating expenses, labor, or administrative costs. If you cannot get full statements like that from a bookkeeping system due to time or whatever other issues are going on, the main things that you're going to be asked about, right? We've talked about this a little bit so far, is sales. So if you have a point of sale system that has this information about how sales were before the pandemic and how they've been affected since, and if you're being asked about payroll, and you have a payroll provider, payroll providers are currently developing these fairly easy to access PPP reports intended specifically for the loan applications. So if you have those two pieces of information, and that is what the bulk of your application is about, A, your sales have been affected, and B, that you need money to pay payroll that you would have been paying, then you've got these two pieces of information. You should be able to access the funds that you need. So not the worst thing in the world if you have these two things. But even if you don't have those two things, if you have other documentation like bank statements, there will likely be questions about those bank statements, right? Because any deposit doesn't necessarily mean it was a sale, just as any withdrawal on a bank statement doesn't necessarily mean a business expense. So really, I would say this is the kind of worst scenario if you just are submitting bank statements, but there's nothing disqualifying anyone from providing whatever information they have, right? So just because you don't have some of these other things doesn't necessarily mean that you're not going to be able to access these funds. You got to do what you can with what you have. The intention of these programs is to get money to people who need it. So if you need it, you just try with what you have. All right. So first we'll talk a little bit about the EIDL. So this is the one that is accessed directly on the Small Business Administration's website. The typical EIDL before coronavirus required you to create an account, and then it would have a number of different documents, and you would piece by piece complete the application. It might take a number of days. You'd have a ton of attachments. They have stepped away from that. Right now, it's anywhere between a 5 and 10 to 15 minute process to submit the only thing that you can submit about this for an initial applicant. So this is where you're seeing people talk about that $10,000 grant or advance. There's a lot of confusion around that. It appeared that that was going to be $10,000 sent out to anyone within 3 days who clicked this checkbox. That no longer appears to be the case. What in some cases we are seeing is that that this is now based on a number of employees, that they're sending out $1,000 for each employee. That's not something that's been in the federal guidance. It seems to be how maybe some of the local SBDC or regional SBA branches are interpreting or processing these. I can't tell you, but there's no room for you to put, I don't want exactly $10,000, I want $1,000. So it's just a checkbox. That comes at the end of a general information gathering section. It starts with your personal information. It does ask for things around criminal background and citizenship. So you'll have to provide that information as clearly as you possibly can. I believe it also asks for your NAICS code, the North American Industry Classification System. That is not something to get hung up about. There might be some areas where you think, oh, I do food products, but I manufacture those food products in my kitchen. Would someone else consider you a manufacturing business? How do you talk about your business to others? That's likely where you have an appropriate fit for the NAICS code. There's only a couple of real distinctions within that for eligibility. And if anything, they are increasing the eligibility for things like food and hospitality businesses, like by clicking that you're in hospitality, then you can have over 500 employees, things like that. So it's not something to get too hung up on if you're not totally sure, but they do have tons of descriptions and examples in there. You would need your bank and your routing number to have that grant or advance process to you. The only financials that come up in this section around your business for most businesses, there are sections around nonprofit losses and around real estate rental losses. Outside of those, because those are optional and only relevant for the businesses that those are relevant for, the two financials that two pieces of financials that all applicants need to complete are gross revenues and cost of goods sold. Before I get into that, I do see a question. If you'll give me just 1 second, because I think I'm going to ask everyone to try to use the chat instead. For whatever reason, I'm seeing the chats, but not so much the questions. Actually, I did see that. Sorry, just give me 1 second. So the question was, if your pass-through business didn't see a profit last year, in that case, you would not have self-employment income. So if you're a pass-through business, you're not on W-2 or anything like that. So in a question that asked for what was your payroll, you wouldn't have a number to put in. Now, if you've been drawing money out of the business and accidentally counting those as expenses, then maybe there's a way to resubmit your tax filings and clarify that. But if you did not have profit, then you didn't pay yourself, right? And again, the intention of these programs is to get the economy back to where it was. So if we were to rewind time to February 14th, 2020, if you weren't getting paid from your business, then these programs are not meant to pay you for your business, right? So it's the same thing for the sales as well as the expenses. You are not going to be applying and using these funds for new expenses. There's just a little bit of discussion around, if you wanted to use these loans and get either penalized or not be able to have them forgiven, that's a discussion you should have with the lender. But the intention is to get you back to where you were at least February 14th. Okay, I see a hand as well. I think the hand went down. All right, so the rent for your business, or even as a sole proprietor using home office, which is really, really a gray area. We're going to talk about, I'm pretty much going to say what I'm going to say right now, but rent is included in the PPP as a forgivable use of the funds. If you don't have an actual business location and you're just paying for your home office rent, if you've been writing off a number of expenses for that, I think it's reasonable to include that as part of your as part of the expenses that you're trying to get written off later on. I think we should really talk about that. Actually, let me get through this because that's really more of the PPP one. The EIDL is for working capital. So these would be fixed costs that you need to pay for, regardless of what your sales are. So it might be more appropriate for you, but it's a traditional loan, right, where you get a term, an amount with a term, and that has repayment obligations. including interest over a period of time. So that might be appropriate for you if you have these kind of general purpose reasons. It's not directly related to payroll. The idea on the beginning of the EIDL around only asking for gross revenues and cost of goods sold is to identify what you can no longer sell anymore, right? If your business has faced economic injury, then you can no longer sell your goods, and whatever the cost of those goods are, you're not needing to pick up either. So it's intended to give you the overhead costs, working capital that allows you to stay open, so that when the economy comes back up, you'll be able to generate sales. And if you have a positive gross profit, you'll be able to cover your cost of goods sold during that renewed sales period. So on this link, again, if you're on the slides, you can click through that. It's not clear how much of this information that's in this link will be asked for after you submit this section, and after you check off that grant advance request. Some people are getting called up and told, great, we're going to process this amount, the remaining amount in between your revenues and cost of goods sold. Others are being asked for a number of different documents and what's the amount that you're requesting. So it's really hard to tell, but once you submit this initial part of the EIDL, you can just start preparing for this, right? The best you can. Try to prepare to have these documents ready. So we'll talk about cost of goods sold. The general idea is if you have products, right? So this was on the specific goods sold. If you have a product-based business, when you purchase inventory, if at the end of the year you have inventory remaining, the difference between what was purchased and what you had on hand and what you have remaining is what your cost of goods were throughout that period. Now, if you do not have a product-based business, you, for one thing, might not have cost of goods sold. Many service-based businesses do not have cost of goods sold. It's also referred to as cost of services or cost of revenue. A way to think about this is, do these costs occur every time I make this type of sale? So in the example of a class, if you are only paying a facilitator of that class when they are teaching that class, right, when they've made a sale for that class, and that you will have to pay them twice if they sell 2 classes, then that's what's called a direct expense, right? Your sales are entirely dependent on that cost to the business. So it would be considered direct labor. If you look on, and we're going to talk about the Schedule C in another couple of slides. It's a profit and loss statement when you file taxes. You'll see the cost of goods sold section, which does include things like materials, but also direct labor and manufacturing costs too, right? So these are things that multiply, costs that multiply with sales. If you have filed income taxes before based on relatively similar business structure that you had through January and February of this year, and that did not have a cost of goods sold number, then as far as I understand, you are not supposed to include your other expenses in this cost of goods sold number, right? Again, the reasoning being that they are trying to find out what portion of your business has been affected. And if you're not able to make sales, then you're not paying for cost of goods sold. So operating expenses, overhead expenses would not get included into these cost of goods sold. If you can, try to talk to an SBA intermediary about this. You are not likely to be able to get in contact with one easily. So I would always rely on what's your actual tax filings. If it didn't include cost of goods sold, then don't include cost of goods sold. If you can't make sense of certain costs multiplying every time you sell them, every time you sell your services, then it's probably not cost of goods sold. But some people might give different advice and suggest that you're going to be in better shape to access the loans if you put other expenses in there. I do not believe that's the case. I would interpret it as directly as you possibly can. It's mostly the best I can give for cost of goods sold. So again, things like rent or utilities or general administrative labor would not be cost of goods sold. All right. Oh, the other thing I should say is that if you put in just your cost of goods sold, right, or if that's 0 or some very small number, but you still want expenses, you want the loan for other reasons, well, you're going to get that opportunity if they think that your business is generally a fit. They're going to call you back up. They're going to follow up and see what amount of the loan you're interested in, what terms they can give you. And that's an opportunity to talk to them about, hey, I would like to pay for, maybe it is inventory. I don't think they're allowing that. It's not typically considered working capital, and it's not expenses that you exactly had in the period prior to January 15th. So not likely to be the case. All right, let's go to the next slide. So on the PPP, the Paycheck Protection Program, this is also a very short process. The actual application itself, that's been shared from the Department of Treasury and the SBA, but might not be the only things that are requested or required of you because you have to go through lenders for these. So they might have additional information that's needed, but this is an actual screenshot of it. Many of you have probably already seen this, and it really only asks for a few things around your business financials. Monthly payroll, number of employees, and what you're going to use those funds for. The reason why this can be so short, and as far as the SBA has required, there are no follow-up documents that anyone would need to be able to process these. It is, however, up to the lenders, is because these are based on self-certifications, right? So the entire second page of this loan application is just self-certification, saying that, yes, everything I wrote up there was true. Yes, I had economic injury. Yes, I am going to use these as I've checked off. Let's see, I think there are a couple questions. Okay, so this is a good question. The part-time employees. So this number of employees on the PPP application is supposed to be full-time equivalent employees. So that is based on a 40-hour work week. So if you have 2 20-hour week part-time employees, you would put in 1 full-time employee. Again, this isn't something that they're going to, charge you for perjury on because you put in 2 part-time employees instead of 1. But it's a great question. If you can get that stuff clarified in workshops like this, great. Yes, absolutely. You are the 1 employee if you're sole proprietor or LLC. So because of all these changes, or really just because of the coronavirus in general, or the CARES Act, self-employed people are part of payroll. So in this case, when they're asking for average monthly payroll, if you're a self-employed person, they are asking for either your business's net income, your 1099 contract, whatever it is. That's what payroll is based on. And so is the number of employees that make up that payroll. Would just be 1. All right, the way that you're going to be able to find average monthly payroll. This is another point where you'll find different information, but the clearest guidance I've seen, and this comes directly from the Treasury Department's most recent published guidance, is that these payroll averages need to be based off of February to June of 2019. So if you did not have these costs in February to June of 2019, and you just started sometime later, then they are asking for January and February of 2020. If you were not in business before February 15th, 2020, then you are not qualified for this program. So the thinking here is that they want to give you money, again, to replace what would have happened if coronavirus never occurred, right? So these funds are supposed to be used by June 30th. So if you have a seasonal business and October through December are your busy seasons, and that's when you have a bunch of payroll, well, you can't use this program for that period anyway, because this is supposed to all be used in before June 30th. So these are just intended to cover the next few months. Once they get issued, it starts an 8-week process, an 8-week period that these loans can be applied and then forgiven. So the on the books employees is not a part of clear guidance. So you can certainly try to get coverage for off the books workers. I think there's, just based on the nature of those situations, the SBA is not going to say, yeah, we're okay with off the books workers, and now all of a sudden, but they know that a large portion of the economy depends on off the books workers having money to purchase goods. So there will be many processors of these loans who are very understanding and who will take whatever documentation you have for that payroll, but for that off the books payroll. But by nature, it's going to be very hard to prove. All right, so no, again, the question with the full-time employees is that's the equivalent. So it's full-time equivalent employees. So you would add up 2 20-hour employees would equal 1 full-time employee. 1099 workers are being asked to apply for the PPP themselves. But yes, you can try it to put it in. If you, again, this is all through a lender. So you should talk to the lender. And don't talk to me about it, because you're going to have to talk to a lender anyway about this. Giving you general guidance, each lender might totally disregard what the Treasury Department said and might require a bunch of other documents from you. They might totally ask for or interpret these things in a different way. And this isn't what the intention of the workshop was today either. So I'm going to try to jump through this quickly. No, that is not correct. There would be, if you put in if you only have 1 23-hour employee, you're going to have to talk to a lender about that. I don't have an answer. All right, so 1099 is supposed to apply for themselves. The guidance is that the number of employees is a full-time equivalent, FTE. You'll see in the guidance. And it's based on hours per week. This application that you can find online and from individual lenders themselves. I'm actually going to click over to one because I know so many people have been having problems finding who's even processing these loans. The Spring Bank in the Bronx is inviting applications. So you can check them out, spring.bank/the CARES Act. They have some instructions and they have the PPP application form. They also have a worksheet, right? And from that worksheet, I think I'm gonna have to switch my screen share to show that. So you'll see this, this spreadsheet that does have these breakdowns. And this is where there are, again, a bunch of conflicting guidance. There is conflicting guidance from different advisors, from different lenders. Something like FICA, we've seen many people say that that's included in your gross payroll, while this application apparently says that it is excluded. I've also seen excluded. I believe that's what the actual consideration for gross is based on the SBA and the Treasury. But here you go, FTE, full-time equivalent employees. Okay, let me reshare. Sorry. Switching back to the web page. Give me just 1 second. Okay. All right. So this application gets submitted to a lender. The lender may require additional documents like they would for any loan. They do have discretion, even though these funds are guaranteed by the SBA. The lenders are going to be the ones who are responsible for collecting on repayments, if that's the case, or verifying that these funds were used correctly. So they do have some discretion in choosing who they essentially give this to. That means, again, there's urgency right now to get this money out by the government. I would say that the lenders themselves are the exact opposite. They would like to take as much time as they possibly can on these because they want to make sure that they get whatever money's due to them, that they don't face any penalties for doing this incorrectly. I would say the government has waived a lot of requirements for these lenders to process them as easily and quickly as they possibly can, but they're still, it's the way that banks and lenders think. So just because you can submit a little bit of documents now doesn't mean that you're not going to be asked later on. So again, do your best to submit what you can, still with a sense of urgency, and then get busy preparing for audits later on, for requests of documentation of how you've used the funds, and more self-certifications in absence of some of those documents. So because of this long process of how you use the funds, and are you going to get forgiven, and are you going to have to repay, that's going to require you to stay on top of your books from now on, right? So if you weren't using your books very well before, now's the perfect time to start. Of course, you can also recreate your 2019, early 2020 history in a bookkeeping system so that you can more easily compare periods. You can make sure that you're staying within that 75% of the payroll, right, which is part of the forgivability criteria. And you'll be able to potentially apply for new funds. None of us have any idea what's going to happen in the near to medium future. So so just be keeping track of all of this. I am going to record this, or this is being recorded, and I hope to get it out tonight, but may be end of the week. I will try to get it by the end of the week. So I believe the adjusted gross income question is about a sole proprietor or someone self-employed. Divided by 12. Yeah, so that is the 2.5 is this question right here, or this section. That is what your total PPP is based off of. But the average monthly payroll, as recently as I've seen, is just February 2019 to June of 2019 annualized. So if that's 6 months, if that's 5 months divided by 5, that would be an average, and then that average multiplied by 2.5. But I don't think you're going to run into problems with doing an average of 12. They might just ask you to correct it. No, do not think that I am a new authority on this. You're going to need to talk to a lender about all of this. I'm sharing what information I have seen. It is not the authoritative answer to all of this. There is guidance on this. I'll share one more screen. And if you've been talking to like an accountant or something like that, absolutely trust them. So this was published just yesterday. The Department of Treasury has some specifics. Let's see. Oh, sorry. Yeah, the PPP on average. Let's see if I can do a Command F. This will be the last detail on these eligibility things. But I just want to show you where I've seen some of this. All right, average monthly. So you can see, you can read this Paycheck Protection Program frequently asked questions. Actually, I don't think this was the exact one I was looking at, but look through here. I believe you will also find February to June 2019. And adjusted gross income, yeah, there you go, February to June 2019. Adjusted gross income is a personal income thing, so I'm not sure what your situation is. If you have outside employment, that would not be part of this payroll. So net income, net profit is the payroll for a self-employed person. And yes, I will send a webinar. All right, so I'm gonna jump through it. So when we talk about sales, because I really would like to get into an actual bookkeeping system. No one's asked any actual bookkeeping questions, so I assume this has all been relevant for everyone. Would I recommend using QuickBooks? Not necessarily. QuickBooks has a paid subscription. Monthly, you'd have to pay for it. Another great bookkeeping option is Wave. You should refer to the bookkeeping webinar that I did 2 weeks ago, which compares the differences between these. I do have, if you go on this link to the slides, you'll see a comparison of the two in these pages. There you go. I'm just going to see if I can share my whole screen. Let's see. Okay. All right. So the Wave apps does all of this stuff, categorizing sales, invoicing, and categorization of bank transactions. You can upload bank statements depending on which bank you're using. You may find different different sync capabilities, integration capabilities between Wave or QuickBooks and your bank. But it's great. It doesn't require a monthly fee. And then QuickBooks has these, $25 a month, $40 a month, and $70 a month. There's great features, and they have great support, like I was talking about, for programs like this. But it's not fundamentally different bookkeeping. It's really the same type of thing. All right, I am going to have to actually open up chat a little bit. All right, so in the next thing that I generally wanted to talk about, I don't think there's a ton to talk about in terms of sales, except for really highlighting that the intention of these funds is to fill back in sales that were negatively affected by the pandemic, right? So if you did not have a lot of sales, or just sales in general before this, and you're requesting loans now, those are not going to meet the intended purpose of these funds, right? The economic injury is primarily around sales, that your sales have decreased. Now, why your sales have decreased? Maybe it's that your workers can't come in anymore. Maybe it's because customers can't come into the store. That's all fine. But you need to show that there is a difference. In most of these, you're seeing 25% decrease of sales. That would be before February 15th to after February 15th. Now, if you have full income statements, monthly income statements that are reconciled and maybe even certified by a CPA, then you'll be able to see that very easily. QuickBooks and Wave both have the capacity for you to run these statements. There we go. So I have sorry, let me stop the share for a second. So I'll go through some of this. All right, so on QuickBooks, you have this reports section, just like in Wave. You also have a reports section. And the primary thing that you'll get from it, sorry, we're gonna need to stop once more. Let me just pause. Just getting to a point where I'm not showing any sensitive data. I'm going to show you a sample company from inside of QuickBooks. It's the one that they give to all the accounts users. And I'm going to show you just a basic empty Wave. All right. So from the reports section of QuickBooks, you will find up along the top your balance sheet and profit and loss, and you just click on the actual text here. But down below, they have a bunch more information, things like profit and loss comparison, right? And you can do year-to-date comparison or month-to-month comparison, right? So you can see all of those sales and expenses by monthly detail. Then you also have, if you are using QuickBooks Payroll, you'll have payroll reports there from your workers section. There are 1099s and things like that you can run as well. But not everyone uses their bookkeeping system for payroll. So in that case, you're able to find this information by pretty much any other list of expenses. So on a profit and loss, you would be able to see what, if you have categorized those expenses in some way around either payroll or benefits or workers, then you'll be able to see what those numbers are. Jumping into questions, if this thing will let me see it. So it's an interesting question around the EIDL and PPP funds. So they are both primarily loans. It's just that the loans would be forgiven. So you would enter those as liabilities. And if they get forgiven, then you would just receive essentially cancellation of that loan. It would be repaid. You could just zero it out. It's not income or anything like that. And the asset is, an asset is typically something that you would receive monetary benefit benefit from later on, while in the oh, I see that you were correcting it to income. Sorry. Yeah. So asset, right, later has monetary value to you. Liability has monetary cost later to you. These are not considered income. So it's a great point around how do you track your sales. If you've been someone who's just relied on bank deposits or bank statements to try to fill your income taxes, or maybe you've just submitted them to an accountant and you're not going to do that when you apply for these loans, you need to get into a list of transactions, ideally in a bookkeeping system like QuickBooks or Wave, and you need to categorize when something's not an actual sale, right? So if you had received it from a loan, you would come up here and you would select, this is a liability. Current liabilities are intended to be paid off in 12 months. Neither the EIDL or the LLL, or the PPP are intended to be paid back in 12 months. The PPP, I believe, is 2 years, whereas the EIDL is up to 30 years. So those would be long-term liabilities. Notes payable is a phrase for just traditional loans. And if you don't have to pay them down, then you essentially just receive a credit. So QuickBooks has this credit memo. Sorry, it's in new credit memo, and you would be able to essentially just zero out that liability. With Wave, same thing. Let's see if we can get into transactions. So if we had some amount, it would be a green number, a deposit. Pretend the 116 is 1,000. You would just categorize this as transfer received from loan. You could do that. Actually, you would have to already have a loan in here. So right, add new account. You would do the same thing, loan, line of credit. And then it's on your balance sheet, right? At the point of receiving this, you expect to have to pay it off later on, but you're hoping that it will be forgiven. It's not clear how that forgiveness decision is going to come in for the PPP, right? There's 8 weeks from the time of origination. So when they tell you, here you go, here's this money, we put it into your account. If you use that payroll, if you use that for payroll or the approved expenses within that 8-week period, then you would have it forgiven. Yeah, I would separate the two liability accounts. Would always suggest doing that. Your balance sheet is something that has, I would say, varying use depending on what stage of your business you're at and who's looking at it for what reasons. But you would see, so first, sorry, I'm in chart of accounts right now. So if you had different line for each of the actual loans, but then on your reports, when you ran a balance sheet, in summary, you would just see those all added up, whatever the loans are at any point in time added together. But then when you were to click details, you'd be able to see what each individual liability was at the point in time that you ran this. And that's the same thing for QuickBooks. They kicked me out. Let's see. They did. Oh, no. QuickBooks, the reports, balance sheet, and they've got, you show your banks, each line in here. Same thing with the liabilities. You've got each line, but you can summarize it and you can see in total, this is what business owes at this date and time. All right, and then one thing I can say in addition to that is that interest and processing or financing fees, administrative fees for loans, those are all expensable, right? So if you have, let's say, an auto payback on a loan where every month it's coming out, you can set it up like in QuickBooks. You can set up a rule that every time it reads $250 to come out of the checking account, that 215 of those are for the principal, right? So it just reduces that liability. And the other 35 is a interest expense, right? So you have these options here, and you can set these rules based on either the description, and so if they have certain text that comes in, or an amount that comes in on a certain date, anything like that. In Wave, they don't have the potential for you to do those rules, but Wave does guess, just like QuickBooks does. So if it starts seeing the same types of transactions coming in, you would, and you categorize it as one thing, then it'll start guessing that the other ones with that same description are that thing as well, that category as well. But in that case, you would have to manually split the deposit between, this was the repayment of the liability, the principal, and this was the interest expense. All right. I think I'd like to take a few minutes to go through what reconciliation is about, because we really want to make sure that everyone can present accurate numbers. We want to make sure that all of the financial statement numbers are accurate. Sorry, I do see that there are more questions in the chat. I will touch on reconciliation with any time that we have. There are specific processes, right? So accounting, reconciliation, and from the QuickBooks, you'll see the same thing, accounting, reconcile, right? It is using your actual bank statements to ensure the generated financial statements are correct. All right, so let me go through some of these questions. Yeah, so the reports on Wave, profit and loss, would show what your income is over a period of time. If you've been using Wave's payroll system, which they do have in here, then you'd just be able to run a payroll report and take those monthly periods to find an average for the PPP. You'd have in your profit and loss your revenues, right? This would be your gross revenue, and then your cost of goods sold right next to it. So you'd be able to complete the EIDL. The initial EIDL application, again, there are a ton of documents that are typically requested in a let's see, in an environmental disaster loan process, and those things about like your personal financial statements, your personal statement of liabilities would not typically be something in your business books, but the sales and expenses, absolutely. And if you're using the payroll in these systems, then it's a very quick process to get those payroll documents. So that Excel spreadsheet was not mine. That's from Spring Bank. So this link, Spring Bank, here, I'll type it into the chat. They have a link to it, PPP loan calculation and forgiveness worksheet. And they're also, I should mention again, they're inviting applications. So if your bank has not been processing the PPP, and you want to see if a local lender will, you can do the application, fill it out, and they have an email address in here you can send it to. I don't mean to just, I'm sure there are a ton of other small community credit unions or otherwise or big banks who are great, and you should absolutely use them if you have a relationship with them or anything else, but it's just one suggestion, one option. So the webinar, if in the invitation to this, you should have seen a link in our events page. You might see a link to it as well. I'll try to get a link out to everyone for the past bookkeeping webinar. The YouTube page it's Start Small, Think Big Bookkeeping. It's only got a couple things on there, but it should be there too. So I will send you that webinar. Yeah. Yeah, again, so this was mentioned earlier, the EIDL has an initial application, which is pretty much just a statement of interest. And if they find that you are roughly eligible, right, where all you're putting in is your gross revenue, your cost of goods sold, and if you're basically not ineligible because of whether that's citizenship status or criminal history or anything like that, then they are supposed to follow up with you. That follow-up is what might be this very detailed process, like every other economic injury disaster loan was. So seems like early on they were pretty much speed fast tracking anyone who already had an SBA 7A loan if they applied early, but it now seems like there's more and more time to either get these grant advances, which again are seeming like up to 10,000 instead of 10,000, and then in that follow-up they may be asking for everything, including balance sheet, income statement, a personal financial statement, a statement of liabilities, and the tax authorization. I would say a tax authorization is almost guaranteed to be a part of that follow-up. This will be on replay, and I'll have it on the YouTube page as well as I'm actually not sure if we're going to put it on the website. This is pretty niche interest using bookkeeping systems. A lot of people are going to use accountants, but we will decide on that, and I'll send everyone who registered to this a YouTube link anyway. So yeah, they're supposed to either send you an email or call you. You can certainly try to call them. I don't know how successful you'll be. For one thing, the person you talk to might have any information about your application, and they are of course just very overwhelmed. But you will hear back from them one way or another. It's hard to say when. Yeah, 3 days is definitely not happening for pretty much anyone anymore. And it also appears that neither is the $10,000, that it's some smaller amount, if any at all. All right, but I should also say that just because you might not qualify for the loan, you might get the advance anyway, or a portion of an advance. As I also mentioned earlier, it does seem to be based on a number of employees more recently, but that's not in official guidance. All right, so last things on bookkeeping, the only other pieces of the slides that I was going to talk about were payroll. So actually, in this last sales piece thing that I'll talk about, consistency is going to be the key here, right? So if you have invoices and your invoices are unpaid, either at the time of February 15th or whatever that is, you just need to be consistent, right? So an accrual-based accounting would count invoices, whether they've been paid or not, while cash basis would only count the payments. So just whatever your filings were based off before, whatever numbers you're going to supply before, just be consistent. Payroll, again, I mentioned this earlier, in that Spring Bank worksheet, they say to exclude FICA. I've not seen that. I've seen that the FICA may be included. This is conflicting information, hard to tell, but this is just about the forgivable components of it, right? The EIDL is absolutely something you can use for, it's a loan. You can use it for working capital generally, but to be forgiven the costs of, to be forgiven the loan amount in the PPP, this definition of gross seems to be in conflict between who you talk to. So in general, what you want to prepare, you put gross as you understand it, right? Which would include, these are the taxes that we pay, state, local, and employment, unemployment too, as well as your benefits, your time off, all of that stuff. The one thing that is absolutely excluded is Corona family leave. I'm sorry, that doesn't even, the Corona family leave, if someone's eligible for that, that's not part of it. That's not eligible to be paid back through the Paycheck Protection Program. So if you have W-2s, that's great. That shows obviously this person's an employee. Again, the 1099s, they're really supposed to apply themselves as self-employed people, and then you have self-employment taxes. So a Schedule C would show what your net profit is. And if you're only going to be putting in a net profit number as your average monthly payroll, then to me that makes sense, right? That satisfies the request for documentation of what your payroll was. Now, if your Schedule C says you have $1,000 a month of net income, and then you're putting into the PPP application $4,000 a month of average payroll, then you'd be missing information without further clarifying elsewhere how you made up the $3,000 difference. So it does just, it depends what information you have and what you're supplying. Benefits are another place where it seems in conflict, depending on who you talk to. I've seen group healthcare benefits a lot. I'm not an expert on these benefits at all. So my general advice is to collect all of the information that you can, what you pay to have employees, what you pay directly to employees or workers or yourself to work in the business. All of those things, collect, categorize them a certain way in your bookkeeping system, make a note, PPP, whatever it is, download them, put them in a spreadsheet. What many businesses do, regardless of this, many of them have a payroll bank account anyway, right? They want to make sure that there's enough money to pay their employees every payroll period, whatever that is. So it might be something for you to do so that you can see all this money, because you really are going to need to have clear records of this when you're asked. Someone gives you $10, $20, $100,000 based off of your word, essentially, right? What these self-certifications are going to be. I would suspect that they're going to be very demanding in a few months when this all settles down and you need to show proof about how you used all this. And I think there's going to be, a fire lit under their butts by the elected officials who want to make sure that this money was spent appropriately. So on Schedule C, I know I addressed it in response to a chat question, but this is what your income taxes are typically based on. It's just an income statement. These expenses do need to be showing from before February 15th. So anything that you're saying you want these loans for need to be things that were on your expenses, your list of expenses being paid before February 15th. The phrasing that's in a Schedule C is totally fine. If you want to use that chart of accounts in your bookkeeping system, great. If it makes sense to you, even better. But of course, if you're nervous about having the wrong chart of accounts and you want to use the language that you know is okay to some authority at least, you can certainly use the IRS's list of expenses. That's also where you'll find a section for cost of goods sold. And maybe that'll make more sense. I would actually not suggest trying to find a bunch of answers. If you're a service-based business and you want to understand cost of goods sold more, looking at the Schedule C isn't going to tell you much. But there are definitions. There's actually a lot of definitions that the IRS publishes guidance on and ways to calculate. But most of that is for manufacturing product-based businesses. The other expenses outside of payroll on the PPP, rent, utilities, mortgage, insurance, all of these things typically have contracts, right? With very easy to find amounts that you need to pay every month, period, whatever it is. So these shouldn't be hard for you to find how much you're going to spend on. And they will not be hard for an auditor, lender, whoever it is, to come find if you've been using the funds the way that you intended. The write-offs, like home office, is not something that I would have expected to be included in here. And I don't have clarity from the SBA that they are, but I have seen from many other sources say that you can include home office deduction as if it was a rent expense for the business. That's something where, you can talk to an accountant after you get approved and you're trying to use those funds. You'll have time to figure out if you can use them. All right, I think there's one more question before we wrap up. So if you are a self-employed person, then you are part of the payroll. All right, but if you have a number of employees, I'm not sure your specific situation might be that you get paid otherwise. The other thing is that S Corp, if you're not on a, you're supposed to be on a W-2. They'll only take your W-2 as payroll. So draws are not considered self-employment as an S Corp. If you're on a 1099 for your own business, yeah, you should be. You're part of pay. If you're applying for this to pay yourself as well as your employees, then yes, the self-employment would really be the number in self-employment taxes, but that should be based on your Schedule C anyway. So yes, should be fine. Okay. No, we didn't talk a whole lot about the bookkeeping systems, but like I said, there's the webinar. I'll send to everyone who registered this recording and the other. You can access these slides, and I've left stuff in here from previous bookkeeping work, because these are, the places on these bookkeeping systems that you need to be familiar with. All right, thanks so much for participating. Certainly follow up, Ian at or financial at. I'll put that top slide up. You can send any questions too, and we'll do our best to get you answers. And if you're not a client, please do look into becoming a client. We're trying to accommodate those who might not have otherwise been eligible before all of this. So you should reach out and find out. All right. Thank you all. I, of course, wish you well, and I wish you health. Thanks.